Hello guys, it's Max here from Daily Market Movements and welcome to our midweek review of the markets. It's Wednesday, which means we are halfway through the trading week. It's been a very volatile start to the start of the week. Of course, on Monday, we had that massive sell-off. And then, of course, on Tuesday, we tried to buy the dip yesterday. That's over in the indices and the stock market. But we gave up the gains about midway through yesterday's session. But what's interesting is that we have rebounded during this morning session. This is on Wednesday, of course. And I'm just going to go over some of the key markets here in the CFD future markets, and which we can go through one by one to kind of explain my thoughts as we go into the end of the week. So we're going to start here with gold over US dollar. So gold has rebounded very nicely from the 1850 area. 1850 has offered support. I'm just going to go ahead and drag a box. This area here has offered support here in the gold markets, and this has typically sent the markets back up towards 1800. Now, what do I anticipate to happen going forward? Well, going forward, I am bearish. I've mentioned this in previous in previous videos, that I am medium to longer term bearish here, and I do anticipate the gold markets to fall back down towards this green box, which is down at 1680. I think that 1680 is a good target for the gold markets, especially once the Fed comes out and starts to begin its tapering process, which I anticipate to happen going into the end of the year. So any minor short-term rallies that occur, just like we're seeing this week, are to be sold. I think that you sell this gold chart going into the 1680 area, and you should make some nice money over the next couple of weeks or months. Now heading over to the Nasdaq100, one of my favorite indices, which covers the tech stocks. Nasdaq100, very interesting. We've tested that 50-day EMA. Now, that was something that I highlighted the other day, is that the 50-day EMA has been so supportive over the past couple of months. In fact, going back down to towards that massive sell-off that occurred back in March 2020. So for the past 18 months, it has offered a significant amount of support. But what's interesting and different with the Nasdaq100 compared to the other indices like the Dow Jones 30 and the S&P500 is that on several occasions we have actually dipped below the 50-day EMA, and then what's happened straight afterwards is that we've risen straight back above it. So if that's to judge what happens here, well then typically speaking, we will break back above the 50-day EMA and surge back towards all-time highs. And personally, I think this is exactly what is going to happen. We still have interest rates at a low, all-time low. Sorry. And of course, later on this afternoon, we have Jerome Powell, the Fed chairman, who's going to come out and basically, just reassure the press and reassure us as investors that interest rates are not going to be touched for a very long time, perhaps going into the beginning of 2023, which gives us over a year until those interest rates may start to hike. So I'm very bullish here for the Nasdaq100. In fact, I think this is a good buying opportunity around this 50-day EMA, and in fact this sets up for a very nice trade. What I would do is put my stop loss just below. I'll put a red box for that, just below the swing lows here that we achieved on Monday. I'd put a take profit up around the all-time highs, and this gives you a lovely 2-for-1 risk reward ratio. I think eventually we break above the 50-day EMA and we go up towards that 15,600 area, all the way up to 15,700, where that's where we achieved our previous all-time high about 2 weeks ago. So I'm bullish here for the Nasdaq100. I see it as a good buying opportunity. I don't think we have much left to go lower because of the RSI. We were at 40, and on Monday we were as low as 35, so we are approaching that oversold territory. Now let's go and take a look over at the S&P 500 chart. There we go. So let's bring up the S&P 500. That's what I was trying to highlight in our last video, that the S&P 500 has acted very, very differently to the Nasdaq100 because the 50-day EMA has been so supportive on several previous occasions. We bounced off the 50-day EMA, and unlike the Nasdaq100, we hadn't really pierced below it. But for the first time in 18 months, well, in the first time since November last year. So the first time in 12 months we have pierced below the 50-day EMA. Again, though, just like the Nasdaq 100, I am anticipating for a break back above the 50-day EMA, and I personally believe we will go and achieve a brand new all-time high before the end of the year. And this is due to the fact interest rates are at an all-time low and are expected to stay there for the foreseeable future. So Nasdaq 100, I see this as a fantastic buying opportunity. In fact, myself and a single team did buy this down at 4,330 going into the close on Monday. And as you can see, we are now nicely in profit, and we're only 20 points away from achieving my take profit, which is all the way up at 4,400. So 20 points away from my take profit. Well done to the team there. And unlike the Nasdaq 100, we did pretty much achieve that oversold territory down at 32 on Monday. And as you can see, we're now nicely bouncing off that oversold territory and off that 3,300 area. And it looks to me that we will go and break above the 50-day EMA. Heading over to the crude oil markets, one of my favorite trades of the week. I was a buyer down at the 50-day EMA. I sent a buy signal down at $70 with a take profit up at 72. We're now currently at $71.86 a barrel, so we're only about 14 cents away from achieving the take profit. I just want to start by saying a huge congratulations to all of our signal teams who managed to capitalize on that trade. Very, very bullish here in the crude oil markets. I did have a stop loss down at $69.50, and as you can see, we hadn't quite achieved that price. We got close, but the 50-day EMA offered plenty of support, and we've rallied off that 50-day EMA to go and pretty much go and test the swing highs, which is currently up at $73 a barrel. I just wanted to put my target a little bit lower than there, hence that's why I chose $72. And it looks to me that we will go and achieve that take profit price moving into today's moving into the end of today's session. Where does the crude oil markets go next? I think that eventually we break above the swing high. We go and retest the 12-month highs here, or 18-month highs for the crude oil markets, which currently sit at $76.23 a barrel. So this area here is where I'm targeting. If I just draw that with a box, anywhere in this area here, I'll put a nice green box color for that. There we go. This area here above $76 to $77 a barrel, I think that's where we go next. And then once we get there, we go to 80. Many analysts on Wall Street have got a price target at $80 a barrel going into the end of the year, as of course the COVID restrictions unwind and more of us are leaving our homes and doing what we enjoy best, which is going seeing our family, going to restaurants, going on holiday, etc., which of course causes a massive surge in the demand for crude oil. Last but not least, the euro US dollar. Let's see what has happened since I last did my video on Monday. So we have rebounded ever so slightly. Very slow movements here in the euro US dollar the last 3 days. Haven't really done much. I am bullish. For those who watch my video on a regular occurrence, you know that I am bullish. I have a price target going into next year around this 1.22 to 1.23 area. I think eventually we break above the 50 and the 200-day EMA. At the moment, there's a $3.5 trillion stimulus package which is about to be approved. And in Congress, that's going to be heavily debated next week. And if that does get approved, of course, that's going to dampen the demand for the US dollar. And of course, the euro will rally. So I do prefer the euro US dollar long term. I think that we will see a break above the 50 and then eventually the 200-day EMA. And that will send us trading back towards the 12 months highs around that 1.22 and 1.23 area. So that's it pretty much for the midweek review of the markets. Of course, I'll do a follow-up video on Friday to conclude the week and to see where what movements we could potentially have going into next week. For those who have enjoyed my video and want more from me, you can go ahead and purchase our Signal service package where you can expect to receive roughly 1 to 3 trading signals a day. And of course, if you need any any advice or need any help with something, you're more than welcome to send me a message on WhatsApp once you've signed up to our service. You can go over to our website, www.dailymarketmovements.com. I've left the website link below the video in the description. Once on our website, you will see we explain a little bit more about our service, and you can just click here, buy now, which will then take you through to PayPal, where you can then sign up to our to our team. So I hope you have enjoyed today's channel, guys. Thank you very much for tuning in, watching. As I mentioned, Friday I will post another video just concluding on the markets. But I hope you're all having a lovely day, and I look forward to those who do decide to join our team.